Hey everybody, my name's John. I'm new to YouTube. This is my first ever recorded video. Um, Happy to be here showing you my options trading journey. It's all after the fact, so you can't buy the options I do, so I don't even feel like I need to give the I'm not a financial advisor and don't buy my trades spiel because they're already in the past. So you can't really sue me for that. But anyway, I started my options journey about 8 months ago, and I was disgusted with my performance of my 401k, and I was like, I need a way to trade the market in both directions, and options has definitely given me that opportunity, and I'm a big fan of the ICT trading method and the strat. I'm also a member of the Bull Trades Discord and trading group. A lot of awesome people doing a lot of awesome things every day. If you want to check out Bull Trades, Sea Blast, Enhanced Market, Ghost, Cedar, and the whole gang over there doing some really good stuff. But this is just my own personal journey, what I've learned, and how I trade. So anyway, I'm going to break down an SPX trade that I had from Friday, October 28th. You can see right at the market open at 9:30, I mean, that nice little rip to the upside. You got the BT Cloud green, following the 9 and 14 EMAs. I like to use John Carter's pivot points, the daily and the weeklies. They're um, a great tool to show you where possible reversals or when a move is ripping to the upper downside where it might get a chance to stall out. So this fat line here is the neutral. Above that, we have three resistance zones, R1, R2, R3, expanding up from the neutral, and down we have S1, S2, and S3. Each of those has a mid between every level. So here you have the neutral, here you have the mid to R1. Okay, so you get that 9:30 rip. It looks like it's going to be a crazy day, but we wick up once close to that R1 and we get rejected right away. Then we come up hard and get rejected a second time. This time is a bigger push down. We see the BT cloud flip from green to red, meaning we have the potential for further downside. And you can see that move carries us all the way from R1 down to the neutral. This would have been a great little put if you played it yourself. I chose not to, but you can see the bounce off the R1, the back test to the mid, and then the further push down. That's like textbook what you want to see. If you did a put and you played it where you should have, you would have entered right here at the bottom of this red candle, and your trade would have been in the green while you're in the red the entire time. But anyway, I'll show you the trade that I did. Um, it's after this downside move. We got what's known as a 222 reversal with the strat. These are the strat numbers that I like to use on my chart. I know what they are anyway, but the numbers just kind of help, for your quickness. Um, the entry is the confirmation candle. Once it crosses above the top of the wick of the previous green candle, this is your reversal candle. We got nice little wicks down, and then your push up. So your entry is the top of this green wick on this green candle. Your stop loss is the bottom of this. I bought three contracts for $215 a piece, and my stop loss was set at 185. So it's a nice tight stop. The move is either going to succeed and you're going to win, or you're going to stop off with a minimal loss. The stop loss is typically 10 to 15% of your overall. Look at this little teeny stop area and look at this reward. So your risk for your reward here, totally awesome trade right here. And if you do get stopped out, guess what? The next trade you make, if it was as good as this one, you can cover one, two, three, four, five stop losses in one trade. I think that's right where you want to be. Protect your capital and avoid risk if you can. So I took my entry here, 3 contracts at 115. My initial profit sell was the top of this green candle right here, where the last push up stalled out. So I sold 2 contracts at 310 at this level, $95 per contract for those two. The second profit level was this green candle right here. It's also at the pivot of the R1 again. There's no guarantee that you're going to push through it. It's a great place to sell and just lock up your profits. Overall, I had 3 contracts for a total profit of $335. This is on the 1 minute chart. So you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 minutes for $335. You probably looking at the chart going, well, John, you kind of pussed out. You sold awfully early. You could have ripped on up even further. And you're absolutely right. I can always do something better. If I would have backed out of my, I like to use the 1 minute for entries and exits, but if I would have backed out to even just a 5 minute chart, I would have seen that this baby was ripping. I could have got all the way up to the mid here at about 36.66. Instead, I sold my last contract at 38.43. But guess what? I'm okay with that. I never look back and say, oh, I should have held, because guess what? Sometimes when I hold too long, that comes down and kicks me right in the junk. And I erased all that awesome profit that I worked hard and waited for the setup to get. So I'm okay with leaving profits on the, further profits on the table. But this is a great little trade. I followed the system just as it should with my sell points. Maybe next time I take 4 contracts and I leave that last runner just to see what it can do and set my stop loss at this second profit level right here, and we'll see what happens. Anyway, I hope you enjoyed my breakdown of my trades, and thank you for tuning in. Bye bye.